All right, it's September. Does that mean that we should expect a red month for stocks? It does. I'm going to be showing you a really cool study and a midterm election study that's going to help you become a better investor throughout the remainder of 2022. And at the end, I'm going to have an ETF that I think is going to help investors ride out some of this volatility. Let's get to it. This is why I love data and history. So I've got all of the S&P 500 monthly returns from 1990 until 2022. So we're talking about what, 32 to 33 years of data. Now, I want to just show you something that in general, right, most months are pretty much positive except for right here. That's August and September. Now look, when I pulled these returns, this was as of 8/23. Now again, the only thing that's going to change is August, instead of being 0%, it's down about 3.5%. But the big message here is that August and September tend to be negative. But what's the bigger takeaway? The bigger takeaway is Q4 tends to be very positive. And in fact, October is up on average 1.4%. November is 1.8%. And then December is 1.5%. But let's keep going because this is a midterm election year. Now, this image is a little blurry. I couldn't get it to look like I wanted, but let's just do this together. So from 1990 through 2022, we've had a handful of midterm election years. We got one in 2022. But what do we see here? We've got August is down on average 1.9%. This is through 2018. And then you've got September, of course, is down negative 0.3%. So again, should we expect a negative September? We should. But here is the key takeaway here. October and November, big time juice, right? October's up 2.5%, November is up 2.4%. So bottom line, expect some pullback in September, but lift off in October and November. Now, all the MAPsignals fans, you know we look at the big money index. There are also seasonality patterns. Now, let's look from 1994 through 2006, only looking at midterm election years. And this is what's really cool. The big money index tends to fall going into October and then tends to lift out of October and into November. I'm going to remove that for a second. But you can see that pattern here. This is in 1994. You can see the same type of pattern here in 1998. Now it's not exact, obviously, but you see a weak BMI, then it gets stronger. Look at this. This is really crazy. Same thing happened here in 2002. You got the BMI, it's weak before it blasts off. Now we didn't see that in 2006. The BMI, it just was strong the whole way through. But let's keep going. And look at this, 2010, you've got the BMI, it's falling right before a big ramp, all right? Get that out of the way. Same thing really pronounced here in 2014. BMI falls, big sell-off in the market, then a big rocket for the BMI after that. And then look at this, 2018, you guys remember that? Big nasty sell-off right here. BMI, it fell, boom, and then you see it start to lift. So what's the point here? The point is that we tend to see weak Septembers, and then in October we start to see blast off. Now, when I did this actual study, this is where the BMI was. I'm gonna outline it here. Overbought. So are we going to see it roll over in September? Well, we're starting to see that right now. Hopefully you are staying with me, but basically August and September, they tend to be red months in general, right? Now we know August has been nasty and we know that September is right upon us. So what I'm going to do now is I'm going to walk you through what the data is suggesting right now. But keep in mind, even though we expect a bumpy September, October and November for midterm election years tend to come out very, very strong. So that's the way I think we should be positioning based on history and based on data. And as a reminder, if you like this type of content, make sure to like and subscribe to our YouTube channel. We have a very unique way of looking at data and the markets. And always remember, none of this is personalized investment advice at all. All right, let's keep going. So here I am, I'm looking at the Big Money Index. This is our portal. I've got it out to 6 months. As you can see historically, when the big money is rushing into stocks, that means volumes are exploding as prices are going higher. That usually means institutions are getting involved. Well, whenever it goes the other way, you start to see the Big Money Index starts to fall, and it tends to lead the market. And look, we went oversold here on July 14th. Then we went overbought. And now we're starting to see that seasonality pattern that I was telling you about earlier, right? The Big Money Index starts to fall, right? Late August into September. So this is exactly what I am expecting to happen in 2022. But remember, bumpy Septembers usually lead to jumpy October and Novembers. Speaking of, let's go over an ETF that I think can help during some of this volatility. All right, so we are expecting a volatile September. So where can you hide? Well, what has been the strongest performing group this year? It's been the energy space. And when I look at the top ranked ETFs, so MAPsignals, we rank ETFs by the constituents, right? The stocks that are in them, give it a fundamental score, a technical score. We can see there's a lot of energy names on the top. And I'm going to be focusing on XLE. That's the Energy Select Sector Spider Fund, ticker XLE. Price is right around 80 bucks. But you can see some of the top holdings are some big stalwarts like Exxon, Mobil, Chevron, and ConocoPhillips. So let's go ahead and do a deeper dive into XLE. I'm going to pop this into the portal. And right off the bat, you can see a lot of big money green has gone into this name over the past year, right? As energy inflation is raging, well, listen, oil and gas stocks have been the beneficiaries. And these green signals are indicating that volumes are increasing as the price is increasing. And that could mean that institutions are getting involved in the stock. Now, recently, we can see that there has been some selling, right? There was a pullback. I think that that is an opportunity because this is where the profits are. It's in the energy patch, right? This is where sales and earnings are growing. So let's go ahead and look at Exxon Mobil. So ticker is XOM. The stock price is right around $96. Big oil gas name. And check this out. Huge big money buying over the past year. And over here on the blue side over here, this is indicating that this was one of the top 20 stocks in our research. So each week we profile the top stocks ranked by fundamentals and technicals. Exxon has been one of those, and usually it means the stock's probably going to go higher over the medium term. Not always. But let's look at some of the fundamentals, right? So 1-year sales growth, 57%. Now, the 3-year EPS growth is very negative. That's because it's backward looking, right? Oil prices weren't sky high back then. So we want to be focused on what's happening now. And what's really interesting is it's got a PE ratio, forward PE of 7.6. That is well below the market, which is right around 17.5 times. We look at technicals. Yeah, it's really good. It's trading near a 12-week high and a 52-week high. It's got a dividend yield of 3.7%, and it's got free cash flow of $36 billion. Let's do the next one real quick. We're going to do Chevron. Same type of pattern. What do you see? Big green going into the name. Wow, a lot of green. Same thing, a little bit of selling. Now we're starting to get back to some of those higher levels. 3 times over the past year it was a top 20 stock. Then if you look at some of these fundamentals, it's pretty much the same story across the board. We've got 1-year sales growth 65%. You've got profit margin of 10%. 25% debt to equity, that's not that bad. Forward PE of 8.5. And it also trades near its 12-week high. So I really like that. Additionally, it's got a forward yield of 3.5% and free cash flow of just over $21 billion. I think you want to be betting on quality. Let's do one more. We're going to do ConocoPhillips. What's the chart look like? Boom, so much green, lots of money going into this name. Again, had a big fall, just like a lot of other energy stocks. But look at this, 5 appearances on that top 20 list. This has been a very strong name, and it's also got a very nice yield.
So 1-year sales growth, 145%. 3-year sales growth, just under 31%. Forward PE, 7.2 times. And again, we're going to give it a very positive score because it's at a 12-week and a 52-week high. And it's above its 50, 100, and 200-day moving average. Also sports a forward yield of 1.7%. And check this out. It's got, let me find it. Where's free cash flow? Oh, free cash flow, $11.6 billion. Bet on quality in these tough times. So that was a lot. So here's the bottom line, right? We covered how September tends to be a negative month, right? That's what we should expect. Also, when it's a midterm election year, it's still negative. However, October and November, we tend to see more bullish signs in the market. You start to see some of that ballast. Also, when it comes to the big money index, which is what we specialize in, you see the same type of patterns, right? You've got weakness, money comes out of the market into early October. Then you start to see people start placing their bets into Q4. And that usually sets up for a strong October and November. I think a great way that you could potentially play this is through the Energy Select Sector Spider Fund. That's XLE. It's got a lot of great energy stocks. They've got great dividend yields. And also in a high inflationary environment, these are going to be the stocks that are going to benefit. You guys hang in there. Leave me a comment. Let me know if you like this video. I'll see you next time.